Time now for business with Kate Moody. Kate, markets are still on a coronavirus-related rollercoaster this Wednesday.
Yeah, absolutely. We saw huge swings once again this Wednesday. On Wall Street, we're back down to the levels that we were after Monday's rather spectacular sell-off, that Black Monday, continuing into Wednesday. We saw losses of nearly 6% for the Dow Jones. It lost 1,400 points for the session, and it is now officially 20% down from its most recent highs. According to most analysts, that is what officially defines a bear market. The S&P 500 and NASDAQ are not far from falling into that level as well. They had losses of around 5% each by the closing bell. Well, trading was suspended in Sao Paulo for the second time this week as Brazilian stocks plunged more than 10%. Monday saw a 12% drop. The Brazilian government formally cut back its economic growth forecast for the year this Wednesday because of the virus. For now, there are no reported deaths in Brazil, but the economy has been hit hard because its largest trading partner is China. Earlier, we saw the major European indices closing lower again. The FTSE 100 down about 1.5%, despite coordinated measures being announced by the Bank of England and the Chancellor of the Exchequer to support businesses and consumers against the impact of the virus. Meanwhile, the VIX index of fear and volatility is at its highest levels in over a decade. Analysts say that the rocky trading is set to continue. Well, the UK became the first G7 country to unveil a coordinated, double-pronged approach to support the economy from the effects of that outbreak, with an emergency rate cut from the central bank coming just ahead of the budget announcement. That first post-Brexit spending plan includes £12 billion in emergency funding to combat the pandemic, and the Chancellor saying that sick pay would be available to all British citizens who self-isolate, as well as those who have been diagnosed with the virus. Analysts describing the stimulus as the kind of measures that are needed to stabilize the financial markets, at least in the short term, although there remain mixed views on just how effective they'll be in supporting the economy in the face of this newly declared pandemic. Well, workers in the so-called gig economy have been identified as being particularly vulnerable, at higher risk both of falling sick and of losing income if they're unable to work. Here in France, there are calls for more support for them, as Delano de Souza explains.
This Uber Eats delivery man comes into contact with around 40 customers a day. It makes him most at risk of contracting the coronavirus. To make matters worse, his unstable employment status means he'll end up losing his income if he's sick.
If I don't work, I don't work. There's no money. It's better not to get sick.
Last month, the French government passed a decree making it clear to employers that anyone self-isolating qualified for sick leave in the same way as someone who is ill. The World Economic Forum, meanwhile, is spearheading an effort to help coordinate the needs of the international business community to cushion the impact from the coronavirus.
Organizations that are not partnering with the forum are absolutely welcome, and we will work in the true spirit of the World Economic Forum, bringing in civil society, international organizations, social entrepreneurs, you name them. So absolutely, I think the principles of equity, access, and affordability for every population in the world are going to be paramount.
The French Entrepreneurs Union is calling for a compulsory insurance policy to be created for the gig economy. It will aim to cover a loss of income linked to sickness, maternity leave, and accidents on the job.
Moving on to some of the day's other business headlines now. Saudi Arabia and the United Arab Emirates have vowed to boost oil production by at least 3.5 million barrels per day, with Saudi Aramco accounting for at least 1 million. The energy giant said it's been directed by the Saudi government to increase its output. Oil prices have plummeted since an agreement last week between OPEC and non-member Russia to reduce global supplies collapsed. Pepsi is to buy Rockstar Energy Beverages for $3.8 billion as it tries to shift away from sugary sodas. Until now, neither Pepsi nor its rival Coca-Cola have owned a major energy drinks brand. Both are trying to appeal to more young consumers. And Boeing is to freeze new hiring and overtime across its business as its 737 MAX program remains on hold and its planes grounded around the world. Boeing Chief Executive Dave Calhoun told employees on Wednesday that it was critical for the company to preserve cash in challenging periods. He also said the company had logged more commercial aircraft cancellations than new orders in February. The coronavirus has aggravated the aviation giant's cash crisis. And Yana, this announcement comes just one day after the 1-year anniversary of that second fatal crash of the 737 MAX plane. 1 year on, we've seen the fleet still grounded, Boeing in deeper financial trouble than ever, and no closer to a resolution.
Difficult times indeed for Boeing. Thank you so much, Kate Moody, for that update. Kate Moody from our business desk.